I'm in the final stages of completing a book titled The Little Book of Bitcoin, What Wall Street Already Knows, But You Need to Know for John Wiley's Sons. This book is designed to offer insights into how Wall Street is increasingly viewing Bitcoin as a significant store of value, much like gold. The recent developments, including the filing for Bitcoin ETFs, underscore this growing recognition. Right now, Bitcoin's adoption in the U.S. stands at approximately 5%. However, if Bitcoin continues to scale and grow at the same rate it has over the past decade, it has the potential to become a major asset, with estimates suggesting it could reach values between $300,000 and $500,000. This potential is based on its historical growth trends and the increasing integration of Bitcoin into mainstream financial systems. The book aims to provide a comprehensive overview of Bitcoin's current status and its future prospects. It is crafted to help readers understand why Bitcoin is not just a speculative asset, but a significant financial instrument with substantial growth potential. By contextualizing Bitcoin's evolution and adoption, the book offers valuable insights for both investors and those new to the cryptocurrency space.
I'm wrapping up a book titled The Little Book of Bitcoin, What Wall Street Already Knows, But You Need to Know for John Wiley's Sons. This book provides an in-depth exploration of how Wall Street is increasingly recognizing Bitcoin as a serious asset, akin to gold, especially in light of recent developments such as the filing for Bitcoin ETFs. Bitcoin's current adoption rate in the US is around 5%. This relatively low figure might seem modest, but it masks the remarkable growth Bitcoin has experienced over the past decade. If Bitcoin continues to expand and scale at the same pace, its potential value could rise significantly. Estimates suggest that Bitcoin could reach anywhere from $300,000 to $500,000. This projection is grounded in Bitcoin's historical growth patterns and the increasing acceptance and integration of cryptocurrency into mainstream financial systems. The book aims to demystify Bitcoin's role in the financial world and illustrate its potential as more than just a speculative asset. By comparing Bitcoin to traditional stores of value like gold, it highlights Bitcoin's unique position and growing significance. The book provides a comprehensive overview of Bitcoin's evolution, its current status, and future prospects, making it accessible to both seasoned investors and those new to the cryptocurrency space. The Little Book of Bitcoin is designed to offer readers a clear understanding of why Bitcoin is becoming a crucial component in investment portfolios and why its growth trajectory suggests it could become a major financial asset in the coming years.
Subscribe our channel and press the bell button to get our video notification. And like the video.
It's quite an honor to be compared to Michael, who is undoubtedly a genius. He got into Bitcoin ahead of me, purchasing his first Bitcoin in late May 2020, while we started buying in September, October, and November of that year. Michael's approach is impressive, but my investment style is a bit more traditional. I have allocated about 25% of our assets to Bitcoin, whereas Michael is fully invested in the asset. Over time, this allocation has grown to around 40% of our portfolio, not because we added more funds, but due to the significant appreciation in Bitcoin's value. Essentially, as Bitcoin's price rises, the proportion of our portfolio represented by Bitcoin naturally increases. If Bitcoin were to triple in value from here and we didn't T-sell any, Bitcoin would take up an even larger share of our portfolio.
It's quite an honor to be compared to Michael, who is undeniably a genius. He was actually ahead of me in the Bitcoin space, making his first purchase in late May 2020. We came into the market a few months later, buying our first Bitcoin in September, October, and November of that year. Michael's approach and timing are impressive, but my investment strategy is a bit more traditional. In terms of portfolio allocation, I have placed about 25% of our assets into Bitcoin. This is quite a significant commitment, but it reflects a balanced approach compared to Michael, who has gone all in on Bitcoin. Over time, the value of our Bitcoin holdings has naturally grown, and now it represents about 40% of our portfolio. This increase isn't due to additional investments, but rather because Bitcoin's price has risen substantially. If Bitcoin AS value were to triple from its current level and we didn't at T make any sales, Bitcoin would make up an even larger portion of our portfolio. Essentially, as Bitcoin appreciates, its share of our total portfolio expands, similar to how a pizza slice grows larger as the pie itself grows. This growth is a testament to Bitcoin's remarkable performance and its increasing role in our overall investment strategy.
I try to be straightforward in my discussions. I get why people hold gold given its 5,000-year history, but Bitcoin offers advantages that gold simply doesn't. It's more user-friendly and portable. Here, S's story that illustrates this well. While I was in Saudi Arabia, a sheikh approached me after seeing my comments about Bitcoin being like digital gold. He told me that Bitcoin is actually better than gold. He explained, right now I'm in good favor with the crown prince and the king, so there is no immediate concern. But if the situation changes and I fall out of favor, I have $300 million on a USB stick. I can conceal it on my body, cross borders, and escape with my assets if necessary. This example really highlights the unique portability and security that Bitcoin provides compared to traditional assets like gold.
I try to be straightforward in my assessments. While I completely understand why gold is so highly valued given its 5,000-year history as a store of wealth, Bitcoin presents some distinct advantages. It's much more user-friendly and portable than gold. Let me share a story that really drives this point home. During a trip to Saudi Arabia, I had a conversation with a sheikh who had seen my remarks about Bitcoin being similar to digital gold. He came up to me and told me something eye-opening. He said, Bitcoin is actually better than gold. Right now I am in good favor with the crown prince and the king, so I don't have immediate concerns. But if that situation were to change, if I fell out of favor, I have $300 million on a USB stick. I can conceal it on my body, cross borders, or even escape by boat with my assets. This anecdote perfectly illustrates Bitcoin's portability and security compared to traditional assets like gold. Unlike gold, which is bulky and hard to transport discreetly, Bitcoin can be easily stored on a small USB drive, making it far more practical for safeguarding wealth in unstable situations.
Subscribe our channel and press the bell button to get our video notification. And like the video.